Asian markets posted strong gains on Friday, with Japan leading the charge, while US stocks rallied on encouraging economic data. Despite a weaker yen and declining oil prices, investor optimism remains high as tech stocks and consumer spending outperform expectations. Japan's Nikkei 225 jumped almost 3%, leading gains in the region. This follows a rebound from last week's sharp sell-off amid rising interest rates from the Bank of Japan. The yen weakened against the dollar, with the exchange rate at 148.88. Over on Wall Street, the S&P 500 surged 1.6% on Thursday, with the Dow Jones up 1.4% and the Nasdaq climbing 2.3%. US Treasury yields rose, with the 10-year yield increasing to 3.9% as economic data showed stronger than expected consumer spending and fewer unemployment claims. Meanwhile, US crude oil prices dropped by 27 cents to $77.89 per barrel, while Brent crude lost 18 cents, settling at $80.86. Concerns over softening demand, particularly in China, are weighing on energy prices despite positive economic signals from other markets. Now, moving on, in a tale of two giants, Thursday's earnings report from Alibaba and Walmart tell very different stories, almost like a snapshot of their respective economies. While China's Alibaba grapples with a sluggish market and stiff competition, US-based Walmart is riding high, breaking records with its strong second quarter performance. Alibaba's latest earnings report highlights its ongoing struggles. The company missed expectations with a revenue of $34 billion and a sharp 29% drop in net income. The Chinese e-commerce giant is feeling the pinch from rising competition and cautious consumer spending in its home market. In contrast, Walmart is on a winning streak. The retail giant posted impressive second quarter results, with consolidated revenue soaring to almost $170 billion, up 4.8% year-on-year. The growth was fueled by a 32% surge in global e-commerce sales and a 26% jump in its global advertising business, particularly in the US. And despite its struggles in e-commerce, Alibaba's cloud computing division is a bright spot. The unit reported a 6% increase in revenue, with the company's investments in artificial intelligence driving triple-digit growth in AI-related sales. This is the fastest growth rate since the June quarter of 2022. Now, Walmart's strong performance didn't go unnoticed on Wall Street. The company's stock hit an intraday record high on Thursday, surging 7%, reaching $74.44 during the trading session. Let's get more on this now with Vicky Price, board member at the Center for Economics and Business Research. Good to have you back on the program, Vicky. Now, this is quite a drastic difference between the two retail giants. Let's start with Alibaba. What can we say led to the company's almost 30% decline in net income this quarter?
Well, the interesting thing is, as you were saying, that what's going on in China and in terms of government policy and growth is working against Alibaba, in fact, which is worrying for them. But it is really mostly, when you look at the details, the e-commerce in China, which is the problem. Whereas if you look at what they're doing internationally, that's been growing. So the real issue is whether the Chinese consumer will remain quite pessimistic, looking ahead, or whether there will be some recovery. Remember, of course, that Alibaba has had a huge restructuring exercise taking place last year. And if you look again at the details, yes, e-commerce has been struggling and there's a lot of competition. They've been trying to put quite a lot of extra merchandise happening through some of its portals, and that's been going reasonably well, just to increase the flow, if you like, of what's happening through Alibaba itself. But overall sales in e-commerce have suffered. But cloud computing has done rather well, and that has also been subject to major restructuring, management changes, and that looks sort of pretty positive looking ahead.
Right. Meanwhile, Walmart has been a strong performer on Wall Street, hitting a record high on Thursday. How has it managed to overcome a challenging market while its rivals like Amazon have been struggling?
It's mainly because the consumer has been squeezed. Yes, we've had some slightly better data recently, with inflation coming down, of course, to 2.9%. That suggests that wage growth in real terms is there in the US, and that is increasing optimism possibly. But basically what Walmart has been doing is keeping its prices low. If you look at some of the details of what's been going on there, they say that a lot of the increase in their sales is a real increase because they simply haven't changed their prices. And that, of course, means that given competition that's out there, what Walmart has been able to do is attract the consumers who are trying to reduce their the cost of their spending, and has done rather well against its competitors. And I think that's basically been what it's been able to do. It's large. It's also been pushing its suppliers and wants to do more in terms of keeping their prices down. So it's benefited from that. But also, again, as you said earlier, we've also seen a bit of a recovery in retail spending. But again, we shouldn't get too if you like, sort of complacent about that in the US, because yes, retail sales look good in July, but they weren't good the previous month. And if you look at it on a yearly basis, yes, it's much better in July, over 2.6%. But if you look at the 3 months, it's not doing that well over the 3 months of the previous year. So the consumer is only just beginning to perhaps feel a little bit more confident, and there is a presidential election coming, and Walmart itself is saying, looking ahead, we're a little bit cautious because of what may happen around the elections and also what's going on in the Middle East and beyond.
All right, Vicky Price from the Centre for Economics and Business Research, thank you very much for joining us.